The indicator needs some work, but yeah, overall I'm pretty happy with it right now. Is that an SMT indicator? It's actually just built into this. The TLM beta indicator. But I do have just the SMT. And look, it's the same. Oh, wait, this one's showing. It's crazy. But yeah, this, I'm undecided if this will be available yet or not. Anyway, okay, so for those of you that obviously have done some research into the lab model, you'll quickly understand that everything around the lab model is basically framing this, the 4-hour highs and lows, and basically trading away from them, right? And how we do that and how I personally do that, right? So as a general rule, typically everything happens in three, like I fully subscribe to the fractal model, right? So everything happens in 3 candles for us, right? You have candle 1, candle 2, candle 3. This also looks like accumulation, manipulation, distribution, right? A lot of people, including T-Trades, will only advocate that you trade the distribution of this candle, right? And I will fully agree with them that most of the time that makes sense to a lot of beginner traders, right? There is a very key difference here is and I'm going to just give myself pats on the backs, is I've made more money than all of them trading reversals. Okay, my win rate may not be as high, or I may take a few paper cuts, or I may do whatever. But the reality is I traded this candle pretty much exclusively, right? I very rarely trade this candle unless it's the wick of this candle, right? So let me just go over some examples, and I'll delete all the drawings because I don't actually need any of them anymore, of how price reverses and where it reverses from, right? So what we can do is we can just go to prior lows and prior highs and figure out what characteristics they all share, right? So let's start here. Candle 1, candle 2, this is candle 3. What makes up the characteristic of candle 2? Candle 1, trend, exhaustion of trend, i.e. this candle just stays. We take out the prior day high here, right? Trapping people expecting the trend to continue, and then trading lower, and we get the rotation in, right? So let's just follow it through. What happens? When the trend stops or we get these pullbacks, right? What are the main characteristics of a reversal forming? A reversal, not a pullback, a reversal. So let's just look. We have this large up move, right? That we can look at. Candle 2, no candle 3 wick. This is not a pullback. This is not a reversal. Candle 2, candle 3, no candle 3 wick, not a reversal. Oh, look. Candle 2, candle 3, candle 1, candle 2, continuation, right? So there are multiple ways to trade this and keep everybody on side. But the reality here is we're always looking for some sort of stopping power, volume, candles seeing some sort of exhaustion, and stacking probabilities in our favor. Same thing here. Candle 2, candle 3. This is candle 1, this is candle 2, this is candle 3. And then look, we get rotational plays out, and then we continue higher. Yeah? Again, here. This is a bit different. Would have got short here, would have got short, wouldn't have got short in this one. No lows, But then what happens right before the push away? We take out previous day high. This is all just the daily time frame, right? Again, what do we know about the market? Everything can be applied fractally. We get a big push away in February, liquidate into the lows. Big candle stopping. What happens? Sweeps previous day low, candle 1, candle 2, right? If you are not looking at this then saying, how can I backwards engineer how I can get involved in these areas? That is basically how I came up with the model, right? Is how do we get involved in these lows, right? Then we fractalize that even more, right? And we say, we have a daily low. What typically happens at daily lows when they form? We just use this one as an example, right? We have a daily low. We have a 4-hour low. We have a swing. This swings. And then we also have this happen as well, right? So again, how do I go back to here and say this daily low, how on earth can I get into this, right? 4-hour, hourly, same thing, right? This low, right? Candle 1, candle 2, candle 3, push up. This is obviously during Asia, so you can see the price action just slowly moves away. 1, 2, this is a 4-hour low. 2 o'clock, expansion, met with redelivery at 7. 7 sweeps this low. We don't need this. It would have been even nicer if 8 took this. Can go even lower, right? So you can see here, right? It's all just highs and lows. It's all swings forming and swings opposing against, etc. This is just how we frame where we want to trade away from, right? Long trend, exhaustive move. This is how we want to trade it. Again, hourly low, right? This is midnight. This is midnight hour. This is 1 a.m. here again. Sorry, not this one. Well, I was looking over here, but typing over there. This is 7:30. This is 7:45. Okay, let me just drag it back even more. All right, so we get clean current price action. So we're on the 15-minute. These are all the swings I care about. The 4-hour, the daily, the 4-hour, the hourly, the 15-minute, right? And for me, they only matter to unlock inversions, right? Or entry criterias. In our case, it's inversions. And then you have the sub 15-minute time frame is where I personally look for entries, right? So we have a 4-hour low, right? Let's just make the 4-hour low blue. We'll make that one blue. Let's make the hourly low. This is a 15-minute, no? Yeah, this is the 15-minute. Let's make the 15-minute low pink. And this is 7:45. There's no hourly low on this. So this is just this makes up of a 4-hour low and the 15-minute sweep, right? We then get redelivery in the opposite direction. The main thing that if there's just a 4-hour and we're playing away from a daily swing, this is the daily swing, we're playing away from a daily swing, is if there's just a 4-hour, the only thing that really unlocks for me is 5-minute inversions, right? That's it. There's not really anything to do there. It also unlocks 15. There's no 15 in this leg that I can really care about. There's no 15 in this leg that I really care about. So for me, it's 5-minute, right? 5-minute inversions. If there was an hourly here, it would also unlock 3. 3 and 5 are in this instance are the same. Doesn't really matter. And if there's a 15-minute, if there's a 4-hour hourly, and the 1 4-hour and the hourly will open up the 1, right? Again, the 1-minute inversion here is the same. This 15-minute swing though, forming inside of a 4-hour swing, if there is an hourly present, it would also unlock the 30 seconds. The data point's not available, right? So I can't actually show you, right? So let's just assume there's nothing here. The main trade that I want to look for is this, right? This is the 4-hour candle 2 sweeping out the low, right? The sweep of that. And now I want to see I want to basically trade this candle back to the other side of this. Yeah. So two things to note here is, one, we are trading a reversal. Yeah. And that has a lower probability of catching reversals. You always hear people say, don't try and time the top or the bottom of the market, right? There's no point. There's no point in trying to time the bottom or the top of the market. Well, I made a lot of money trying to do that. Sure, I do lose consistently on a regular basis. I'm not trying to sit here and pretend that I only win. That's not the case. I do lose. But after this is rebalanced, combining all of these swings, I don't see a reason that this should then trade away from it, trade back to here, right? That's the logic that I've developed. And then what I do is I wait here. And if I was in this trade at this point, I don't care about 15-minute swings. So as long as I'm in the trade during a 15-minute swing, I don't care if the 15-minute swing closes or not, right? Here we have an example where we don't have an hourly swing, and at 8 o'clock we open up here and we trade higher, or sorry, we trade lower, and then we trade higher, and then we go sideways a little bit, right? So for me, the main thing here is I most likely am going to wait for 8 a.m. to take the low, right? And if 8 a.m. doesn't take the low, I'm then going to trade candle 3. And at that point, candle 3 is no longer my model. This is the fractal model, right? So I will always just trade those two models. At 8:40 here, because I'm trading candle 3, I will need to trade candle 3 here. Candle 3 happens at 10, right? At 10 o'clock, I either want to be positioned in this trade, trading away from here, to trade the 4-hour candle, or I want to see 8 a.m. take a low to then trade higher. There's not really much more to it. In this instance, I most likely would have been long here, and at 8 o'clock, I would be waiting for the low. So either I'm in the trade accepting I'm going to get stopped, probably not going to happen. The probabilities of that aren't in my favor. Or I go break even. In this instance, I'm most likely going to go break even, especially after we have some sort of consolidation and we fail and this sell off immediately. I'm most likely going to go break even at 8 because I'm expecting this to then recreate that 15-minute swing and then push higher. We don't do that. That's not a problem. We only have a 4-hour and we only have a 15-minute swing. So for me here, I don't have a way of trading this from a TLM perspective. This trade for me doesn't fit the criteria of combining the 4-hour and the hourly PO3, but it has the logic for the 4-hour PO3. Yeah, we have that 4-hour trades into the low, we get an expansion away. If I want to trade this candle, I want to find a way to get positioned in the next 10 a.m., in the next 4-hour candle at 10 a.m. At 10 a.m. now, we have one thing, right, that's now formed, is that this blue line on the 4-hour chart is now a swing, and this 4-hour candle is set to expand upwards, right? Okay, I'll give you a little bit of an exciting fact. This is the Trump candle, so whatever, right? So at 10 a.m., I now need to find a way that I can get into this trade, right? If I want to get into it. Again, logic for premium discount. Here, this has been rebalanced. Let's just go to the lower time frame. This has been rebalanced. After taking this low, do we rebalance? No. 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 So now, all I care about is 10 a.m. opens, takes 9 a.m. high. I have two choices here. I can't short this. I can't short this for the simple fact that 10 a.m. is set to be an expansion candle. So at this point, I have two choices. I either short it or I look to get long. I personally would prefer to get long here off of a 5-minute or a 15-minute low, right? The 15-minute low is here. And the 5-minute low is here, right? So this becomes my logical liquidity target. Logical liquidity targets for me are two things. They are targets to trade towards and targets to trade away from. That's it. It's 50%. It's the first low where I want to look towards, right? So if I wanted to trade this, I have a 4-hour high taken, right? All this is a previous 4-hour high. This is a 4-hour high. I have a 4-hour high taken. I have an hourly high taken. This is 10 a.m. open. I have a 15-minute high taken, which for me would unlock the 30-second inversion, but we don't have that, so we can only just trade the minute, right? So for me, I can either look to trade this, right, here, like this. Again, I personally wouldn't do this because it's an expansion candle, right? Candle 3, if candle 2 creates the swing, candle 3 is set to expand away from the swing, right? Or I look to get long off of this area. So let's just scratch this. We'll leave the trade on, but this is something that I would never take because this is set to be an expansion candle, higher, sorry. So you're in the trade. The only criteria for me here now is either take this low or we take an hourly low to allow me to get into this trade. This is 10. This is 10 a.m. open. This is 10 a.m. low. This is the logical liquidity target. We have 11 coming up. Where's 11? So this is 10:59. This is 10:59. And this is 11 o'clock. This is the 10 a.m. low. 11 takes 10 a.m. low at 50% with this candle set to be an expansion candle. So for me, I now missed the short, which played nicely, which I'm sure a lot of people would like to tell me is the model, right? And now I have a way of getting into this, right? So I have 2 1-minute candles. I am going to bet there's a 30-second inversion in here, right? Now what I can do is I can long off of this 30-second if we get a closure above, right? Get a closure above. We'll just assume that this is the 30-second. And I can long this back to the high. What I can also do here is I can also use standard deviations to point me towards, that's not a deviation, point me towards where we're most likely going to reject from, right? Mark out the highs resting around -2, -2.5. And if we get a good reaction off of them, the standard deviation is most likely correct, right? Again, if I wanted to draw this out correctly, and I'm not going to go on to 15 minutes because it's just going to show us what the chart would do. If I want to draw this out correctly, I would start on a higher time frame. So I would most likely draw it from here, and then I would refine it to the one that makes sense, right? So for me, I have an option to then trade this off of this 30-second. Why? Because we have a 4-hour low. We're trading away from a swing, right? We're in a 4-hour expansion candle. So we're framing that candle to go up. We just got an hourly low. We just got discount. The hourly open, which it will also correspond with the 15-minute low, unlocks 30-second inversions. In this instance, we can't look at the 30-second inversion, but we have 2 1-minute candles that sell off, and then, look to buy up. Overall, because it's set to be an expansion candle, the current 10 a.m. high for me has to go in some capacity, right? That's it. So for me, this is the trade that I personally would want to frame here. And again, if you ask yourself, where on earth can I go break even? Well, if you want to go break even from somewhere, when you're trading to the logical liquidity target, the only way you can really go break even is on a 15-minute low. So here you get in this trade, you get into this trade at 10:23. So you're in the 10:15 candle. At 10:30, at 10:30, you need to wait for the previous candle to get taken. So here, right? And at this point, you'll break even and then you're out, right? So that would be where you would be break even, because to summarize, you would be in this is the previous 15-minute candle. You would be in here, but you would be in the candle that starts here and ends here. So this is the 15-minute candle, right? You get in here, you need to wait for this 15-minute candle low to get taken before you can get break even. Once this 15-minute candle gets break even, once this 15-minute candle here gets taken, you can go break even, and then you would be trailed out of this, right? You can just delete that so that it's not too much on the chart. Same logic here. You're in the 15-minute candle. You can't go break even until 11:15 or the previous 15-minute candle. Right? So with that in mind, like I said, if -2, -2.5 is sitting here, and this is the previous 15-minute candle, where's a logical place to go break even? This is your logical place to break even, right? You can aim for the high. Why? Because the 4-hour candle is set to expand. We're trading we're trading the hourly C2, candle 2, using the inversion, right? And now at the point of a new 15-minute candle in 4 minutes, 1, 2, 3, 4, here, this is a new 15-minute candle. We also now take out this candle high, which at that point is a new 15-minute candle high, right? So now this becomes your logical break even. And this is just the resting high that we have marked from -2, -2.5, right? Your break even. I'm actually skipping a bit far ahead, actually. This is 11. This is now 12, right? Yeah, 12 right here, right? So now, this is the logic how I personally trade these, right? Is we entered on 11. This is the 11 o'clock candle, but the 11 o'clock candle creates the swing. 90% of people would stay break even here. For me, I personally like to move my stop loss back to this low, because at this point I go from trading a 15-minute candle looking for reasons to stay in the trade to now I got into the trade on the hourly candle. So for me, my logic for this, using the logic of expansion, is this candle will expand to the upside, aligning with our 4-hour draw. The only area it shouldn't trade back into is this swing. Again, this is not foolproof, right? This is just stacking layers of confluence, what work over a period of time to develop an edge for expansion candles in the same direction. The exact same logic that the T-Trades uses for his fractal model. We just get in at different times. He trades the expansion and continuation. I trade the reversal away from it. If you were to want to get into this trade here, this 7-hour trade, or you want to wait for 11, 12, his logic would be he wants to see, actually, we can just chuck the fractal model indicator on. Will this ruin it? No. Here we go. He would want to see change in state of delivery above this high before getting long, right? So this indicator here will show you is that actually this candle was an expansion candle lower. But for me, with the logical liquidity target, the 15-minute sweeps, this is what I'm, how I use it, right? And now I'm expecting this candle to expand into the high, right? There's no change in state of delivery. I'm not using breaker blocks. I'm not using any of that, right? All I'm using is previous hourly highs and lows, right? Now we have a previous hourly high sweep, right? Here, you can see like it swept this hourly high. Now the logic for me again is I can now move this trade back to break even, right? Let's just go back and move our trade to where it should be. Again, this goes from being a 2.4-hour trade, trading the continuation model from him, to a 7-hour trade for me. Okay, so I then personally go break even here now because it's a new hourly candle, right? I use the logic of entries to the logic of how I manage my risk, right? I use, if I'm trading a 15-minute low with a 30-second inversion, I'm waiting for the previous 15-minute high to get taken. If that is there are too many 15-minute candles consecutively at a new hourly candle prints, I reset my trade in terms of I move my risk back to break even. And once we take either side of that hourly candle, I'm either wrong or I'm out, or I'm break even on the hourly high. This is the hourly high. I'm break even on it. I think we're about to get a God candle. There you go. So for me, I'm able to avoid taking this trade, which a lot of people would think, yeah, this is the trade. This is how I get into it, to taking the reversal away from this, protect this 4-hour low, waiting for the hourly sweep, and then trading the reversal away or the continuation away from it, right? And the reality is this is the most profitable way to get into it. And I'll guarantee you this, a lot of the time this does this and then does this, and you get swept here and you get a chance to get back in and whatever. But the reality of this is I can take 5 of these losers and still be profitable. I can't take 5 losers on a 2-hour trade and be profitable. That's just not how math works, right? And then lo and behold, this explodes shortly with the Trump tweet about tariffs. There you go. It goes from 17.5K to 18.5 instantly, right? So, and truth be told, I actually took a trade away from here. And if you go back and look at the Ninja Trader stream from the 9th of April, you can see me in a 1,000 tick trade that, whatever. And I again was talking about this on the stream, right? I spoke about how I want to see this candle set to be an expansion, etc. -2 though gets hit, more or less gets hit here, pullback, expansion, -4, and then we pull back, and then we get Trump news. The rest of it's out of our control, right? So to summarize, and I guess, and we can use most recent price action to give us a good understanding of how this plays out, is all I really care about are the 4-hour highs that form and the 4-hour lows. But and I'll just give you the context here, is a lot of people end up shorting this here when this candle opens, trades above and trades lower. That's just a fact. You're basically trying to trade the other side of the 4-hour candle all of the time. The important thing here is when they all align. That's when the win rate really ticks up, right? When the daily, the weekly, even the weekly, the weekly, the daily, the 4-hour, the hourly, the 15-minute, plus that inversion in below the open, that is when the win rate of this model shoots right up. Shorting every inversion after a 4-hour open is never going to make you money. The context around how that happens is important, right? If we look at today, 4-hour high, hourly high, 15-minute high. We don't need to do that. Go down to the 1 minute. There is a 1 minute inversion, never trades back into it. Oh, what did I do that for? Thirty-second inversion, never trades back into it. The reality is that I most likely would have never taken this 30-second because it's not above this open. Like I said, the win rate does increase when it's in the wick of the candles you're trying to trade. At this point, this is the wick area that we're trying to trade. We don't get an entry. But the most important thing is if I wanted to trade this, how can I backwards engineer it? And that's how I came up with the model. Logic for today, like here, right? This 4-hour candle is if out of 1, 2, and 3, the 6 a.m. candle here is what candle? It's a question, by the way. I'm expecting an answer. Candle 2. Why is it candle 2? Give me a reason as to why. Let me just rewind so we know what candle we're talking about. It won't do it. This candle here is candle 2. It took the previous 4-hour high, traded a lot lower, right? So what are we expecting in this candle? The 10 a.m. candle. Expand lower. Okay. Are we just going to get into this candle here and then expect it to expand lower after trading 200 points lower? No. Okay. So what can we do to make our life easier then? From the high to the low, never rebalanced. Never rebalanced. Oh, look. Rebalance, almost like it's crazy. So that's balance. So this price, this premium discount is never, it's not important anymore. So now we have this high. We obviously know this doesn't rebalance. So now we have a 4-hour candle trading into 50%. We have a previous 1-hour candle there. We don't really get a 15-minute candle above, but now we do. That 15-minute candle is the swing candle 1, candle 2, candle 3. We in agreement that this is candle 2 right here? Are we in agreement with that? So what can we not do here? So what does this mean for this candle here? Candle 15, this 15-minute candle. We can't short it. Why can't we short it? It's going to expand higher. So if this is going to reverse off of this candle, what do we need the next candle to do? Take the high. So right now we're stuck waiting for time to do its thing for the next 14 minutes. No, next 10 minutes, right? After that, we need the 15-minute candle to create the high. What's the only exception here that this then becomes the thing that we care about? If this closes like this and this flips bearish, what does this do then? Creates swing, becomes candle 2. Thank you. Right? So at that point, with that in mind, right, let's mark out the open of that candle, that 15-minute candle, 33, 30, 31. It's right there. We already marked it out, right? So if this, so now we have a parameter for our trade, right? Let's turn this off. We have a parameter for our trade. This is the 15-minute open, right? We know that everything after this candle is set to expand. Yeah. This candle is set to expand higher. So we have two parameters for our trade. We have the new 15-minute candle takes the high here. Yeah. Where these cross. After this will be the high. And if it creates a new high, this will just move up, right? That creates the parameter for our trade to look for an inversion, right? Above that. Or it closes below it closes below here. At this point, oh, I need the pen. It closes below here at this point, and then we can look for this. Yeah? Because this point, this then becomes the expansion candle. Yeah? So we can't trade this candle until 11:45. That's it. If and when, let's just, for example, talk this through. If at 11:45, this takes this high and then starts to trade lower, and we get in something up here. Yeah. We get in something up here. Whatever. This is in the 15-minute. That would be on the 15-minute. This would create a 15-minute candle 2. And then this is the open of the candle 3. What would this do for us? This would align with our Let me just put this down on the text. H4 candle, expansion, H1, M15. Okay, so the H4 candle is set to expand, so we're stuck really looking for shorts for the next 3 hours, right? However long however long that candle's set to last, right? The the H1 candle would become C2, reversal candle. The M15 candle would become the reversal candle. And then in so right now this is currently 11:30. The next 15-minute candle, if C2 closes as reversal, becomes expansion candle. Yeah. Are you following? Let me just delete these. Yeah. So this would become our reversal candle, and the next candle after this at 12 would become our expansion candle. Yeah. So the 12 o'clock 15-minute candle would become this expansion candle. Right. Let's just put 11:45. The 12 p.m. M15 candle equal expansion lower, right? So that's the M15 sorted. But candle H1 would be a 11 o'clock C2, and at 12 o'clock would be C3. So we now have a narrative that if everything aligns at 12 o'clock, we have all the things to align that all of the candles we care about are set to expand lower. Do we all agree on that? Or have I not made that very clear? Zaza and Raz get it because I spent a lot of time with those guys. Other people, is it clear? Yep. So now let's just lay out the logic for our trade. This high, or the opening price is traded through. Open, M15 open. We also have the hourly open right here. And this is the hourly swing. I know this is a bit chaotic to look at like this, but I'm just trying to show it in the nicest way. Hourly swing, hourly open. All right. So now in 15 minutes time, we have a trade idea that we either want to see trade here for a reversal or here for a continuation for the next 15 minutes. And then at 12 o'clock, we want to see everything trading back below this in this area, basically, for a logical reason for it to expand lower. Back into at least this low. Do we all agree on that? I think we all agree, right? And if we get if this opens up in this box, right down here, I'm trying to make this as logical as possible, in this yellow box, then this candle would be the main area we would look to trade from. So for sweep confirmations, are you looking for candle 2 to close below candle 1 open? No. I'm looking for candle 2. Let's just mark this out, right? This is not candle 2, but let me just show you an example. This is candle 2 right now because it swept this high, right? This 15-minute high. Right now, we're framing that this could potentially become a candle 2. I can't trade this because it's set to be an expansion, right? So for me, I need to wait for this candle to play out like it has here. It did not close. It closes a swing, but didn't close below the open, right? So for me, it doesn't really matter. And on ES, it did close below the open as a swing. So that messes it up even more. It's hard. I'm going to be honest. This is very difficult because this is candle 1. This is C2. There is a 15-minute swing. There is an inversion, and ES is way weaker. So the reality is I don't want to take this, but I could quite easily see this playing out. This remains my area of interest, and I want to get short above this open. I want to get short above this open and this open. So for me, the only place I can short this is here. But I need this high to get taken first. We have our lower time frame. Sorry, it's not even that one. Let me go up. It is this. We have our lower time frame logical liquidity target, which is making me lean even more like that we need to take this high. This would take our logical liquidity target, give us an M15 swing. Or candle 2, potentially, right? And then all we really need to see is a lower time frame inversion above the hourly open, above the M15 open, with that sweep in mind. It's ES trading above it already. Okay. I would still like to see it take this because of this. The logical liquidity target. These are my POIs for shorts right now. These two areas. Above the hourly open. Ideally above the previous hourly high. Yeah, above here. Previous hourly high. As of right now, this would be active because of this SMT. I don't like it anywhere near as much because the logical liquidity target here, but ES is creating a 15-minute swing again, right? We have a 4-hour expansion candle. Tick. We have an hourly swing forming. Candle 2, tick. The 4-hour and the hourly unlock the 1 minute combined. The 4-hour, the hourly, and the 15-minute all aligning unlocks the 30-second. There's SMT here. And this trade can trail... Well, this would be the discounted area. Because this is the logical liquidity target on the hourly. This SMT basically negates this 15-minute swing and adds confluence. I still wouldn't mind it if trading higher, obviously, right? I'm just going to put one on just so we can manage, just so we can visualize it. Oh, I moved it yesterday. Let me put it back. And now we need this trade to not play out immediately. When do we need this trade to play out by? And close below by? It needs to close below here and below here by here, because this is our line in the sand. It's looking fucking messy. How can I clean this up a little bit? We can delete these because they're not relevant because this SMT right now. We got a closure below this. So this SMT for me is active. Oh, we didn't actually close below the wick. It's annoying, but it is what it is. I can put as many minis on as you want, to be honest. We compromised the entry by marketing in, though. So we just need this trade to, no, I'm not my personal. We just need this trade to close below this hourly open and this previous hourly high, giving us a strong confirmation that this hourly candle is C2, this 15-minute candle is C2, and then the next 15-minute candle and hourly candle should do what? Expand. Okay, where is our, currently we're short in the 9:45 candle, right? Sorry, the 11:45 candle. So we can only get break even at the low of the 10:30 candle, 11:30 candle. So as of right now, this is our logical break even area. Yeah, we would have been in this trade. We just fucked up on the entry with the 100 minis. At 12 o'clock, where does our break-even point become? Someone tell me. We're trading the 11 o'clock candle. At 12 o'clock, we can get our break-even point. Where can we get break-even? At 12 o'clock, where can we get break-even? Previous hourly low, which would be what? The 11 a.m. low. Good job, man, dude. Which is currently here. So this at 12 o'clock. So during this time, this is our logical break-even area. Yep. This is our logical break-even area right now. And at this point in the chart, this becomes our logical break-even area. We can go break-even here, but at this point, our stop loss becomes the high again, right? And is it this high or this high? Is it the blue box? Or the red box? And give me your reasons why. Any more answers from anyone? Red? What about the reasons as to why? It's no right or wrong answer. Well, that's a lie. There is a right answer, but I'll explain as to why you're potentially wrong. Okay, the answer is the blue box, because at 12 o'clock, all we care about is the hourly swing holding. The SMT allows us to get into the trade, but at 12 o'clock, it's not the invalidation of our trade. This is why 99% of people are wrong about SMTs. That's it, really. A lot of people would say it should hold. But like, we don't care about the 15-minute swing not being a swing here because of SMT. Yeah, at 12 p.m. or a.m., whatever you want to call it, you would need to move your stop loss, yeah. But at this point, you're in the trade 2-3 minis or 2-3 micros, 5-6 micros, and you go from risking $240 to $290, you could realize one of your trades to cover the additional risk for a good entry on the expansion candle. Yeah, do we all agree on that? I personally wouldn't mind doing that. If I had the choice of shorting 3 here, right here, let's just say in a minute, shorting 3 here or 2 here at the point that this crosses this line at this price here, I'd rather short 2 here with my stop loss above the high, right? It's 11:59. Let's just remove our drawings quickly. We're break even on this trade for the next 38 seconds, right? Let's just remove our drawings quickly. Hourly swing. This is now going to form a swing high. Yeah? 15-minute. Oh, wow, we messed up here. Oh no, this is set to be the expansion because of this SMT. The next candle is set to be the expansion. We have the 4-hour candle that is set to expand because of this. This candle is set to expand. This is open high, low close. Go back to the minute. We have 6 seconds. We can add our drawings back on. We open up. Our stop loss goes above the high now. We now have an hourly expansion candle and a 15-minute expansion candle, all aligned, right? This no longer this is 11:59. It's worth noting, but it's not actually anything. This is now our logical break-even point. Our stop loss on, our thing on our trade. Remember, this is the 30-second inversion. We have a TP down here. Or, right, again, this is a 3.8R trade, right? Or you have the option to wait for this to open high up here. Do the same thing, same trade, same logic, for half the risk to reward. Yeah, it's this hourly low. It's the hourly candle that we traded, right? The low of C2. Because what do we want to see candle 3 do? So what do we not want to see it do? From where though? We don't want to see it come back after taking the low. If it takes the hourly low and reverses, it's not good for us, is it? If the 10 a.m. is expected to continue expanding, why don't you put your TP lower? I mean, you can. Officially, you can put your TP at this low, right? I think the reality is that if you think a 3.8R trade is not good enough for you, then trading just isn't for you, buddy. I know you're just asking, and I'm just telling you, it wasn't personal to you. Because our job is not to grab the entire move, right? Our job is to just break even now. Our job is just to get something and get out, right? It's also 50% of the range. If something trades from 50% of the overall range to 50% of the range and then continues higher like this, would you kick yourself for not closing here if you notice that this is 50% of the range? Of course you would, right? So that combined with the fact that this is an hourly target, like an hourly logical liquidity target from this low to this high, this is basically the 1 minute low, the hourly low, which also is 10:30. This is 10:30 in this instance. So it's that 15-minute low in here. Why would we not, you know? Close it here. If ES takes 15-minute high and forming swing high and NQ doesn't take it, would you still take the trade? Yeah, you always go for 1 to 2. Yeah. I mean, then this trade's... You're out. You're basically out at this logical break-even point. This, again, great trade, right? 50%. The model is literally designed to capture the wicks of candles in the direction of higher time frame order flow at 50% of the range. So for me, this is like a textbook A+ setup, right? 50% of a large drop. This candle is set to expand. Took a swing, trading higher. It's still set to expand. Yeah? This is set to expand. This is all set to expand. Yeah? You got that change state of delivery on a higher time frame. On that 5 minute. It takes the hourly low. You're short, break even at the low. You get a good entry up here. You can either realize profits for 1 to 2, or you can aim for this. This is how I trade. This is how I would do it, right? $22275. That's where your stop is. Yeah, your stop loss is basically at entry. So I'll just put it on so that if it triggers, we know. But we'll see. We'll see how it plays out. Don't get put off by this push up, right? We have our stop loss in break even for a reason. It took out that 15-minute logical liquidity target. I say 15-minute, like the 15-minute range, right? You can see the indicator plotted that automatically. If I delete this, right? You see that? It took out that 15-minute logical liquidity target. I still wouldn't mind if we actually take it by a couple of ticks and then trade lower. I'd still welcome that. Fractally, we go from 4-hour discount up here, create a leg, 15-minute discount into 4-hour discount or hourly discount. See what I mean? Just aligning all these stacks. And once this then trades into here, it could either go to the low or go to the high. Doesn't matter. Because at that point, we captured the piece of the pie that we want, which is this trade right here. And it's risk-free now. We agree? Completely risk-free. ES showing strength, taking out the low, the high, still same thing. The only thing is that the logical liquidity target for ES is a lot higher. And it's wrong as well. Oh, it's on the 30-second, that's why. That's wrong. Let me just send it. People often ask me, why do you have to go break even? Because the reality is that we are trading a reversal model. So we have to have predefined areas of where we should get break even to reduce our risk, right? There you go. Took that 15-minute by a few ticks. I would just like to see this sell off now. We have a 15-minute and an hourly swing against us, which is the main reason we go break even as well. Yeah. And we also have this 4-hour swing. Despite this candle being set to reverse, we do just have to lay out all the factors, and the expansion candles can also just immediately become reversal candles. But the data suggests that they don't. So we have to treat them as expansion candles. And if that means we take a loss, we take a loss. And that's completely okay. Our job's not to control the outcome. It's to stack the layers of probability in our favor and take the most probabilistic trade, if that's a word. So just to highlight, the reason that we break even here is because we took an hourly low at 12:03. It took out 11 o'clock low, and we're expecting the 12 o'clock candle to expand. So we trade candle 2. And if we don't get a reversal and a 12 o'clock candle expand, then we don't want to be in the way of this coming back in our face, right? ES is also showing a lot of strength going into the highs, and you get stopped to break even. But this is the model, right? Nothing in trading is guaranteed. You just need to have logic as to the reasons as to why you get in and out of the market. We got in because we're expecting this candle to set up as a swing, trade lower. It doesn't trade lower. We're break even because it takes out the previous hourly low. That's it. There's nothing really more to that. And this is completely okay, right? Anyway, guys, appreciate you all. It was just a quick impromptu video after quite a dry day. And yeah, appreciate you all.